IDBI Bank, that's a stock which has surged about 3.5% at the high point of the day today. Right now, as we speak, we have CSC not doing too badly as well. CSC up around 3%, most of the gains coming by in just the last 15 odd minutes. DLF, of course, gaining from strength to strength. In fact, that stock has gained about 20% this month itself. So that's as far as the mid-cap space or the secondary market is concerned. Not looking too bad from the mid-cap end of things, despite the Nifty and the Nifty Bank being off the highs of the day. But primary market action in focus as well. The RVNL IPO opens today, and on Monday we have the Metropolis Healthcare IPO opening on April 3rd actually, wherein the diagnostics company will look to fetch around 1,200 crores. The price band set between 877 to 880 rupees. Both the Carlyle Group as well as the Shah family promoters will divest their stake. Yash Jain, my colleague, caught up with the MD and asked the MD about the funding situation of the company.
As far as our expansion plans, as far as our whatever small capex investment that we need to do for maintenance capex,
right,
we are able to create that from our own internal cash flow. So there is really not a requirement for external funding. Only if we do a large acquisition where we may require additional cash. But of course, we are also a debt-free company, so we have the ability to raise debt on the balance sheet.
Correct.
And obviously, as a public company, we'll also have the ability to use stock as currency for M&A as well.
Absolutely.
So I think going forward, we have a lot of open channels for funding, so I'm not too worried. And for our existing expansion, there's no worry.
Could you just give us an understanding in terms of what is the annual cash flow which you generate right now, and what is the kind of investment in expansion that you would look to make approximately in the next 1 to 2 years?
See, last year we generated about 110 to 115 crores of free cash flow, maybe a little bit more also.
Correct.
You know, usually our maintenance capex is not more than 10 to 20 crores a year.
Right.
So, you know, we use the balance for acquisitions, smaller acquisitions, which is what we've been doing for the last many years.
Absolutely.
As you'll see, Metropolis has been quite prolific on acquisitions. We have the ability and the risk-taking appetite to do it.
Correct.
So that we hope to continue.
Speaking about your financials, ma'am, can you help me understand what has been the revenue growth for the company in the first half of FY19, and also what's the kind of revenue figure that you expect to end the financial year 19 with?
So I can share with you up to December, because those numbers are in the RHP. You know, we've seen about 18% revenue growth up to December. You know, we are quite confident in our ability to be able to deliver, hopefully in a more consistent, in a very consistent manner moving forward.
What is the kind of margins which you right now enjoy as far as the business of the blended business is concerned, and how do you see that panning out in the next 1 to 2 years?
So if you see in 17-18, our margins were about 27.8% EBITDA and about 17% PAT.
Correct.
We feel reasonably comfortable with these margins.
Okay, all right. Time to slip into a short break. As promised, we'll get chatting with the management of Amber Enterprises post an acquisition that they did earlier this week. Stay with us.